Welcome to Illuminati Silver. We tell you the truth about silver. Today is Wednesday, the 28th of December 2016, and we're briefly commenting on the forces likely to affect oil prices in 2017. As we reported recently, and which is now common knowledge, the world has faced an oil glut, mainly caused by OPEC having no agreements on output and the considerable amount of oil produced by US shale oil producers, all of which has caused Brent crude oil prices to fall from over $115 per barrel in June 2014 down to $27 a barrel in January 2016, and are now standing at $55 a barrel after this month's OPEC Non OPEC production agreement. The question many people are asking is, where are prices likely to go from here, and what will influence them? Well, the answer is that it all depends upon whether OPEC and non-OPEC countries stick to their agreements or not. On the 30th of November, OPEC members agreed to cut oil production by 1.2 million barrels a day. On the 10th of December, non-OPEC oil-producing countries, in discussion with OPEC members, agreed to cut production by 600,000 barrels a day. Analysts believe that if these cuts go ahead as planned from January 2017, then we should see an eradication of the surplus supply, much of which is currently stored in supertankers, 40 of which are sitting off Singapore's coast or in nearby Malaysian waters. If this occurs, we could very well see oil prices rise to $70 to $75 a barrel. However, there are a number of factors which suggest that the agreement may not hold. Iraq, for example, may need to increase funds to pay for the cost of its war with ISIS. Iran, which has been subjected to severe trade embargoes, will be looking to earn as much revenue as possible to reflate its economy. And US shale oil producers, which have cut back production because of the low price, may increase production again as prices continue to rise. In addition, we should also not forget that China's economy has for many years been the second largest oil consumer in the world following the United States. If its economy falters in 2017, then this is likely to have a considerable impact on prices too. And finally, we must not forget President-elect Trump's policies, which at this moment we have little idea as to how they will affect oil prices until they are announced. It goes without saying that the value of the dollar also determines price per barrel, as oil is still predominantly purchased in US dollars. We are assuming for 2017 that continued dollar strength will to some degree maintain the status quo as far as its effect on oil prices are concerned. Our view and best estimate at this stage is that production limits will be adhered to for at least a few months, but we are quite frankly not too optimistic about them holding throughout the entire year. Yes, oil seems to be reasonably pegged at $50 and could rise to mid-60s. Much beyond that we doubt, unless of course there is some international crisis or an increase in conflict in war-torn areas of the world. So to conclude, subject to the proverbial black swan turning up, we shall see oil prices throughout 2017 vacillating between $40 to $65 in the main. We hope you have found this video interesting and informative, and if so, please give it a thumb up and share it on Twitter. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe as a free member for regular email updates and offers. Our Facebook page, which is updated daily, can be found at facebook.com/illuminatisilver. Disclaimer. Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.